The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show a little bit differently today because it's a very important day for Elliott wave theorists. I put the chart up for the EWT's interim update, and as you can see here, they are suggesting that we could be looking at a very important top with 5 waves completing. If anybody can tell me the importance of this chart today, they will win a very, very nice prize. So you have about 30 seconds to tell me why this is an important chart today, and I will be happy to send you the prize. Okay, we'll start off by looking at these waves. Folks, I started looking at Elliott wave back in 1970 up in San Francisco during the Cycles conference for Mr. Oh my, I hate it when I have a time lapse here. Oh, shucks. Anyway, John Hill was showing me, the Elliott wave paper. He happened to have it with him at that time, and, we went through some of the waves and stuff, and after that, I did a lot of studying with it. And remember, when Elliott did this, he was only looking at 382, 61% retracement, and 1.618. But the importance of this Elliott wave picture today that we're looking at is today is Ralph Elliott's birthday. He was born on July 28th. And so I don't know if that means anything, but I think it's only apropos that it come in near the time of his birthday. If this is in case it was the the absolute high. I don't know if it's going to be the absolute high or not. There's a lot of work up here that says it could be. The action like we're seeing here in Amazon this morning is indicative of how, tops come in. They go up on just total jubilance, and then all of a sudden everything changes. And bada bing, bada boom. But it's still a little bit early, I think, to call that. But this is a very nice wave count. But I've always had trouble with wave counting. And the reason why is that they just, every time I had Bryce Gilmore or Bob Miner visiting me up in Pismo Beach, they would always be arguing whether it was a 2 or a 4 or a 3 or a 5. And, I said, my goodness, this is where you take your risk, whether it's a 3 or a 5 or not. And anyway, so I've had a hard time measuring the waves. And I remember back in 1987, when I first found the 78% level from 78% level from Bryce Gilmore, and the importance of it and its relation to 1.27. I faxed it over to Bob Miner, and he said he really didn't think that meant anything because, Elliott had not done that work. Well, Elliott didn't know it. That was the problem. No one had, spent some time with sacred geometry because, these numbers are all related to those numbers. I mean, every single one of them. The problem is, how do you put them all together? And the secret is try to get 2 or 3 of them together. That's what you're really trying to do when you do wave counting. I had, Basil does a really, his is a whole lot easier, than the Elliott wave one that I can see. Let's take a quick look at what happened yesterday after that market was hit. By the way, I appreciate you saying the nice things about Stan Harley. He was in touch with me yesterday, and I know he was happy that some of you were able to at least take advantage of this. Here's what's happened to the NASDAQ yesterday. As you can see, we had that big drop where it dropped about 170 points, and then it rallied exactly to a 50% retracement. And then so far today, we've rallied up to a 61% retracement of point C. This leads to a price objective of around 57.72. That's down 250 points. Remember, the NASDAQ broke 250 points in one day, back in June. So this is not a big deal. Markets go up very fast. They come down a lot faster. So just keep that in mind as we're looking at that. I think the most important thing that has happened this week is the fact that what is going on with the euro. Let's just put this up here because we have completed this thing. This is what we were looking at as of last Saturday. Just a second here. Last Saturday, you'll notice we went up there and we hit that 117.77. We backed off all the way to a 116. Today's rally, right after the GDP numbers, was a perfect 78% retracement, spot on. And so that was enough to, stop the market, at least so far. Now, if we get above 117.77, then we're going to proceed higher. But if we don't go any higher today and we close a little bit lower, we'll see that what is going on at that point. You have your bid in at 57.72. May the force be with you, Dudette. It might be today. I mean, that's not very far. That's not even as big a correction as yesterday. If we got that. So we'll see if that's going to be the case. The next one that's really interesting, folks, and let's just take we're going to take a little bit more than just a few minutes with this one. This is from one of our good friends at Absolute, really, really super trader, a new trader, but he's done some great work here in the gold market. I want to send this to you. Hold on one second, as soon as I can get the old picture to take it. And there we go, right here. You'll notice that we have this downtrend line, and you can see these breakouts, and that's why you have to be careful with trend lines. They break out at certain levels. But if you'll notice, the equal time parameters are between the tops. That's due today, folks. And we did make a little tiny bit higher high in the gold. We did not do that in silver. Silver has not taken out the 1680 level. We've only got to 1672, I believe, today, so it's lagging badly. But this is the time frame where we've had equal moves. So pay attention to this. This could be in other instances where we're looking at a potential, false breakout in the gold. And I know a lot of this is related to what's happening with the GDP. The number was very good, but numbers are supposed to be good. That's the way they are. So just don't get too excited because it really hasn't broken out yet in the gold and also in the silver. Remember, folks, that we'll be switching over from August gold to December gold, which was my favorite contract of all time. Back into December of 1980, and I sold gold when it was above $1,000 an ounce way back in that area, and that was a long time ago, but that was a lot of fun that day. Anyway, we'll be watching these because the potential breakout is there, but it hasn't broke out yet. We need silver to get above 16, that's clearly above 1680, and we need gold to get August gold above the 1272 level. Then I would say, yes, this is probably a pretty good breakout. But until that time happens, you're looking at a chart in that silver that is rather ominous. I'm going to point this up here and let you take a look at it. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a quick look here at the crude oil market. And this is going back over, quite a few days, so we're able to see these waves unfold. Now, here's a perfect example of the simplicity of looking at these price swings. I mean, all we're looking at is A, B, C, D patterns. You don't have to worry about whether they're labeled a C or a 5 or a 3 or a 2. Looking at the retracements, you're looking at the expansion. As you can see here, right at this level where we're trading here at 49.20, we're completing the second ABCD swing, the smaller one. The larger one is already completed at the 49.05 level, so up in this level is where they're completed. Does that mean this is going to be the top? No one knows, but this is where the patterns have been forecasting they should go to, and this is where we are right now. And so, and if you'll notice the chart, I mean, these are very, very quiet markets. I mean, there's nothing, choppy or anything. Even during the time of the GDP number, crude oil did very little. So this is a very large market. I'm sure I've mentioned this before, but there are actually 6 traders in the world that actually do about 60% of all the trading in oil. There are 3 of them in Singapore, 2 in London, and 1 in, I believe, in either Abu Dhabi or Kuwait. I'm not sure, so we'll watch to see what's going on during that time. We've had a question from our good friend Gator about the 135 pattern for tops and bonds, for tops in gold and bottoms in gold. That 135 pattern works on anything, Gator, but this is not actually a 135 pattern that we're seeing in that gold chart. That is not, because you don't have the 3 lower tops. You get that one top that's higher in between, so that is nothing more than a retracement move. What we were showing you here, what he was showing us here, is the fact that the time cycles from high to high, these 4 cycles that are there, have been spot on. This is the same stuff that we saw from Stan Harley yesterday. You remember how he was talking about that 26-day cycle, potentially topping, and that's exactly what happened. The darn thing went right up into the 26th. It was actually the 27th day, one day off. So we'll see what's going on. Just remember that we really need to switch over to Christmas gold, December gold, today, because they'll start rolling these over from July to August. You don't want to get involved with any of that stuff. And usually the brokerage firms alert you now long ahead of time, to exit those positions so that you don't have to worry about the problem with deliveries are nothing like it used to be, years ago before we had all this electronic stuff. So that in itself is not nearly as important as you might think. I personally think the most important thing that we have going on today, or this whole week, is that euro chart that we looked at that 117.77 level. That's going to be extremely important, as is the same chart that we were looking at in the British pound. We had the same thing in the British pound, where we had both of these charts on the long-term, dailies, and also the weeklies have rallied to the 382 level, which is, very, very important. Regarding the Treasury bonds, folks, even a good GDP number can get them to rally very much. So I really believe the bonds and notes are getting ready to go higher. Let's try that again. I believe interest rates are going to go higher, and that the bonds and notes are going to go lower. All we need to do on the bonds is to get them below that 152 level, and I believe that they're going to give up the ghost. All they were able to do on this last rally up at that 155 level was make a 382 retracement, so that in itself would be something I think that would be relatively negative. Now, someone's asking another question. Getting back to the crude oil, folks, the heating oil and the gasoline have already broken out to the upside. They've already exceeded those ABCD numbers. So it's the leader of the pack, the crude oil, that has not been performing as well. So I'm not sure what that means, but usually when in the soybean market, if the meal is not doing well, oil is not going to be able to pick up the slack, because that's only 20% of the value of the soybean contract. So we need to watch that one, very, very closely. But the breakout in the gold market, if we get this spot gold August that we're in right now, we get that above the 1270 level, and we get silver above 1619, you would have to say that is a really, really strong breakout. And then the same thing with the euro. If the euro returns today above that 117.77 level, that's also another breakout. And we've had such a big drop, of course, in the U.S. dollar index, because we went below that key level at 94.50. That's when the euro broke out above the 116 level. So this is all fitting together very, very nicely. I do want to mention there's one segment of the market that looks really negative, folks, and that is the transportation index. As you can see here, we had a big down move yesterday. In fact, this is actually a little bit more than this, but not by much. So it has made a 50% retracement of that move, but we'll watch that very, very closely too as we start looking at these markets this morning when they open here in just a few minutes. Actually, they're trading now, but the real open has not occurred as yet. This is what we're looking at here in the T-bonds, folks. I want to show you why I think this is such an important chart, and we'll just put this up here. Get this up here and take a look at it. You'll notice that high that we made up at that 157 level, that was a very key level coming off of the 177 level. We've been down to 158.06. Let's try it again. 152.06. Early this morning, we rallied up to 152.26, I believe, after the GDP report. And now we're just, backing and filling and bouncing around. So not much is happening. But if we get below that, you see that that's going to set up another move of 3 handles down in the Treasury bonds, and that would put September bonds down at that 148 level. That's going to put rates above 3%, substantially above 3% in the 30-year bond, and I think that will be very interesting. What's hard to understand is why the dollar is so weak given the fact that our interest rates are so high. Usually higher interest rates will draw money from foreign accounts into your account because you're giving more interest rates, but that's not what's happening right now. That could be due to, the quantitative easing and all the other games that the central banks play, which I think someday will come back to haunt us, but that day has not approached us as of yet. So we just want to watch this as we get ready to see the opening here this morning. We got a few bills to pay, and I think just a few seconds. And when we come back, we want to talk a little bit more about the a couple of stocks that I think we have an interest in, one of which, of course, is Amazon, because, that's got a whole lot of interest in all the markets. And when it drops $60 in one day, that's no big deal because it's done it before. I mean, that's the whole thing. It's not a big deal at all. Okay, we'll take a little break here. Oh, not yet. We're not on. We've got to keep talking, I guess. Let me get this Amazon chart ready for the next segment so we'll be able to see it. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of Amazon, the daily chart. The problem is that I don't trade stocks very often. That's the understatement of the year. But have you noticed that the opening price has not been hit? You'll notice the price there at 10.11. That's where it's trading right now. It broke $70, about almost 2.5%, I believe, after the earnings. And as Tom O'Brien talked about it, they can make those earnings do whatever they want to because of their cash flow that they have. But it broke off about $70. You know, it's broken it's broken below $70 several times over the past few months and continued to go up to make new highs. Now, at the new highs yesterday, I understand that Mr. Bezos was the first $90 billion man. And he surpassed Mr. Gates for just a few moments. But then with the sell-off, he moved back into second place. The rest of the story will be determined, of course, at a later date. Now, I wanted to talk just a little bit more about one of the, well, actually we have a request on sugar. Let's just bring up the October sugar so we can see, we're seeing a big bear market forming here. And we've had a nice rally here that's taken 1 month to complete, up around this $15 per pound level, excuse me, in sugar. And believe me, when this stuff was $25 a pound, the whole world wanted it. There was no sugar available. It was going to be a scarce commodity, and now we're trading 10 cents a pound under it, giving back more than 60% of its value. And that was all during the time when the news was very, very bullish in sugar. So all we're seeing here in sugar is just an ABCD pattern. I don't trade sugar very often, but it's a pretty good market to trade. I wouldn't day trade it, of course, but for daily things, it does look pretty good. We've had a question about the copper market. Copper also broke into new high ground. We got up to 287 a pound. Which was, nothing more than a retracement on the long-term, weekly charts because, we topped at well over $4 a pound in copper several years ago, and that's all we're doing is making, retracements on this. So I don't see anything in copper that is interesting. I think the interesting trades are in the foreign exchange market. Look what's happened to the Canadian dollar. Look what's happened, to the British pound, and the euro and the Japanese yen. All of these are the ones that, where the action really lies. Since we're talking about the currencies, let's take a quick look here at the U.S. dollar index. This was as of yesterday, and of course, after we got down to that we got up to 117.77 in the euro. We hit 93 in the dollar index. I think we hit 92.90, and then it reversed. And then all we've done in the euro since that time was to make a 78% retracement of that move on the downside and a 78% retracement of the move on the upside. So those are the things, that we're sort of keeping an eye on, as we look at these markets this morning. Someone's asking a question, where would I say that I'm wrong in the crude oil? Folks, everybody's looking for $50 a barrel in crude. We got to 49.39 just a little while ago, and I don't know if we're going to make $50 a barrel or not. All I know is that we got a lot of ABCD patterns that are finishing up in this 49 plus area. So this is not the place where I would be buying the crude oil. I just don't see how someone can do that. So these are just the things that I'm looking at. But whether that means anything or not, I don't know. Regarding the bonds, we're trading at 152.23 right now. And this market is extremely bearish, folks. There should be a great deal of resistance up here at this 153 level. That's not very far away from where we are right now. But that's just my opinion. And, opinions like armpits. Everybody has one, and it usually smells. So just keep an eye on it. Regarding the stock market, I've had several questions during the break here. Folks, it has all the earmarks that a major top has been made. And I'm not relating this to the Elliott wave thing either. We were listening to Norm Winsky on Tuesday, and Stan Harley on Wednesday, both showing some very interesting things happening in those markets. But again, those are just things that are technical and have nothing to do, with the fundamentals. And that's actually one of the the good things about this is that you do have a situation where you're looking at something that basically describes what's happening on a mathematical basis and not on the stuff that the people are reporting in the news. And that also is something that is pretty interesting. So we'll watch it very, very closely. But this type of action that we had yesterday in the NASDAQ, but the Dow Jones did not follow through at all, mainly because of their biggest one, which is just, hold on just a second, is Boeing Airlines. That's the one that's been doing the thing set up. The answer, someone's asked a question about the euro. The euro set up a beautiful trade just a little while ago when we hit the 117.46 level. That was a 78% retracement of the last move, and the move down last night was an exact 78% retracement of the previous swing. I mean, I think I can put that up here and let you take a look at it because it's a real interesting chart. In fact, I did this yesterday on the 15-minute basis. Let's just pull another one up here. I can do this in just a second here. Mr. Z, hold on, and we'll be ready to go. And all I got to do is do this and do that, and bada bing, bada boom. And we'll get this thing ready here. All I have to do now, Mr. Z, is find that puppy. Okay, hold on one second, and I know it's here somewhere. 166, 168, 166, 168. Where are you, 168? Oh, no. Well, I found it. There it is, 168. We'll put this up here so you can see. This is what happened over the last day or two. We went up to the, when we hit that 117.77 level, we pulled back exactly to a 78% retracement of the low on July 26th. This morning's high right after the GDP report was an exact 78% retracement. You're showing 0.81, but the difference between 0.81 and 0.786 is like 5 pips. So that's insignificant for trading purposes. And now we're trading at 117.21. So as long as that 117.80 does not get taken out, so we're heading. I think we're heading to the downside, but that's neither here nor there. So watch it very, very closely as we go through some of these. I hope that answers your question, but that's what I'm looking at. I go to a 15-minute chart on these currencies, and that's what I'm trying to do when I look at some of these things. As far as getting in for a very, very low risk, that's what the whole key to watching some of these things is going to be. So I think it's important to keep an eye on that. Okay, we've got the stocks down a little bit. The Dow's not even down hardly at all. The NASDAQ's down about 24, and the E-mini S&P's down about 4. So this is early in the morning as we come into amateur hour, and we'll see how these things end up. So we'll take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to just hold on one second, please. I wanted to bring up the chart of Boeing Airlines just to show you a very unusual price chart, because this is one of those charts that, the earnings came out. As you can see, we went from 213 to 227, and then from 227 up to 242. It's actually trading down a little bit today, but you've got these major gaps in here. Folks, this is a classic example of an exhaustion gap. I don't know where it's going to exhaust to, but this is one of those situations. So pay kind of, pay kind of close attention to that, because it's going to be looking at a very interesting time. As far as the VIX index, I still think that if I had to do a trade of the year, this is the reverse VIX index that we're looking at right here. And I believe that everything is set up, folks. Whether it happens or not, I'm not sure. But and I don't even know if yesterday was the high or not. All I can say is that you've got a situation here, where you've had a pretty good run to the upside, and we backed off a little bit. So that's really, all we're really watching. So keep an eye on that, because if this top does come, it's going to surprise a whole lot of people, and including me. But we'll see what happens with it. But we've gotten back above 5,900 now. In the NASDAQ, there should be some resistance at that 5909 level. But, as we know, these markets can move a great deal higher very, very quickly, and, not even bat an eye. So we'll watch these. We're trading at 5905 now. Watch 5910. That'll be an interesting one, to sort of keep an eye on. But the VIX index, getting back to that, that's a long-term monthly chart. It's a perfect three-drive pattern. It's got everything that you could possibly see. And, of course, we're having a big reaction this morning to the upside. It's still down on the day, but we're having a reaction. Let's just take a quick look together here on the NASDAQ to see what the 382 retracement is. Right now, where we're sitting right now is a 78% retracement of the high that we made intraday at 59.20. That's all we've done. That's why that 59.05 level, 59.09 level, 59.05 to 59.06 is pretty interesting, whether that's going to be much or not. But we've just rallied, 40 points. That's usually short covering rally. Now, yesterday I checked out the open interest on the NASDAQ, and of course we did lose open interest yesterday, which means the buying that started in the morning didn't have follow through, so the short covering happened. Whether it's going to mean too much from that level or not, remains to be seen. So that's another one to look at. To me, we're looking at 57.75 in the NASDAQ before we get another possible leg up. But then if we get above 59.22, that would change the whole format on this, and it would be certainly a lot different. But this is still early in the morning, folks. We're only been trading for 15 minutes, and believe me, the S&P is lagging the market. The leader of the pack, folks, has at least during this last run, not counting yesterday, because yesterday the NASDAQ was leading, but then it gave it all back up. It's been the Dow Jones, because even with the NASDAQ down over 100 yesterday, the Dow Jones was still up on the day. That was primarily due to a couple stocks, mainly Boeing, because it's such an expensive one. So those are just some of the things that we want to keep a close eye on. That's the main thing of what we're watching here. So let's take a quick look here on the euro. I'm watching the euro here because if we can get the euro above this 117.80 today, that's very, very significant for interest rates and also for exports and stuff. That means the dollar is really, really failing, and then that means that the euro is going to go higher up in probably the 119 to 120 level. But to me, it's really important this week because of this chart right here, and let's just bring it up. I'm going to review this because I think it's this important. Is the fact that we took out the highs of 2015 at 117.77, and then we backed off 170 pips, and now we rallied back 78% of that. So this is going to be where the pedal meets the metal, as they say in racing, and this is going to be very interesting what happens at this point. Someone's asked a question about the corn, folks. We mentioned that the D's corn when we got to 381. I think I've got it here. Hold on, let's take a look. Oh, that's beans. I still think the beans are coming up to a 61% retracement now, up at this 1011. This is going to be interesting here in the beans because that's going to be a very interesting one. Here's the corn. Let's just put this Christmas corn up here because it's had a pretty good move off of this bottom right here, and then you'll see that we're still rallying a little bit. We got up to a little above that 390 level in the corn, so that's starting to move in the right direction, and we'll see if that continues to move in the same way. They keep asking me about the crude oil, folks. All I can tell you is heating oil and gasoline have already broken out to the upside, folks. That much has already happened. What we're watching now is whether the crude oil is going to play catch up. Now, everybody's talking about $50 a barrel in crude oil, and the price objectives that we're looking at, those ABCT patterns, they measure up here to 49.30. I don't know if they're going to get much above that, but the difference between 49.30 and $50 a barrel is only 65 cents. That could be here by the time I finish this sentence. So watch it very, very, very closely because that's the one that people are really keeping an eye on. But heating oil and gasoline have both broken out to the upside. There's no question about it. They cleared it easily. So the components of the crude oil market have done well, but the others have slowly hasn't done very much at all. Now, I wanted to bring up a pattern that someone from across the pond asked me about this morning, and that is the Swiss franc market. And I wanted to bring this up to show you. This is another reason why the dollar is weakening. You'll notice the three drive to a bottom pattern that we had here on the Swiss franc. It was just about as perfect as you could possibly get. What's interesting is we took out the lows from last May by about 10 pips, and that's when the market reversed. So those are the kind of things that we've talked about here many times, and that's part of tape reading, and we'll see what's going to be what's happening. You're right, Mr. Bill, that NQ was a 382 of the range. You're absolutely positive. Good job. Anyway, we'll keep an eye on this morning and see what keeps what's going on with it, and we'll go from to see what's going on, because it's interesting here, to say the least. But the bias to stocks, to me, appears to the downside, bonds to the downside. The dollar, mezzo, because we got to get the euro above this 117.80 level, and then we've got something to hang our hat on. But to buy some VIX index for your grandkids, because you're going to go look in the history book and say, gee, it got that low? Anyway, we'll find out if that's going to be the case or not, but it's sure got a great pattern. I don't know if it's going to mean much, but it's one of those things that does look pretty good. Finally, I wanted to mention, well, I've got a little bit more to go, but look at the natural gas. We've been down here for several days now at this 292 level. So this is either, we've been here for 4 days, folks. It's either getting ready for a major move here or it's got trouble. So we'll take a little break, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of Apple And as you can see, during this last rally, it made a 78% retracement. It did not make new highs, along with Netflix and all the others. So it was acting a little weaker than the rest of the market. I don't know if it's a portend of what's going on or not, but the fact that Apple was not able to do it. I was very surprised to hear that Apple doesn't produce any of their own stuff, that they job it out, which is pretty smart, I guess. They don't need the facilities for it. So that's an interesting thing. But the stock is just lagging a little bit. The fact that it could only make a 78% retracement, where the rest of the market, went crazy. Facebook, of course, and the type of action that we had yesterday in Facebook and Amazon is indicative of a blow-off move, just like we're seeing in Boeing Airlines. When Boeing finally does, make a turn, and what I would be doing is I would be watching Boeing to close in the lower part of the range over the last 2 days today, because if it gaps down tomorrow, that would leave an island reversal at a very, very high level, and that would be a very, very low-risk trade. So that's on my watch list. I don't do any stock trading very much, but I will be looking to, to either short the stock or buy a put if Boeing closes down near the lower end of the range, and then I would say that would be a real interesting one to do, because you've got the weekend coming up, and as we mentioned before, our good friend Norm Winsky also has a real strong astro date in this area for the stocks and grains also. So it's going to be pretty exciting, to watch some of these things unfold as we look at some of these things. Regarding the gold and silver, we need that August gold to get above $12.70. We need silver to get above $17 an ounce, and I would think that would be a valid breakout. But until that times, I don't think, I think the bias is to the downside. That's the only way I can see it. Whether that's the way it is or not, remains to be seen, but we'll keep a very close eye on that also, because it's an important thing to watch. Okay, folks, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.